The Toronto real estate market just hit one of its lowest points in over 25 years. And it's not for reasons you might think. February is when home sales start to heat up for spring. But this year, buyers are actually staying on the sidelines. A brewing trade war with the US and some winter storms have combined to bring sales activity down to levels we have not seen since the 2009 financial crisis. Meanwhile, with sellers also backing off, prices have remained surprisingly steady. But here's the real question. Is this a temporary slowdown, or are we on the verge of a major market shift? If you're thinking about buying or selling, this could be the turning point you've been waiting for. Hey there. I'm Matt Sloan, a realtor here in the GTA. And I know I have to ask to grow my new YouTube channel. So if you wouldn't mind, please take the 2 seconds to hit that subscribe button. It would really mean a lot. And if you do like this video, please leave it a thumbs up. So the stats are in for the month of February. And have you heard how the market is really looking? And how this is the time more than ever to be tuned in with the market if you're thinking of making a real estate transaction in the next 6 to maybe 12 months? Well, here is some of the information you need to know. So we're going to start with looking at prices, how they've been affected with everything that's going on and how they've started off the year. And we're going to lead into the supply and really the demand of how things are looking across the GTA. So kicking off, this is a headline we haven't really seen too much of in the media because they always like to really make things either one way or the other. But prices are fairly steady across all housing types. And we'll get into more of that in a little bit here. But in February, we saw condos have a 1.3% annual decline, while semis rose in towns, dropped 2.5%, and detached homes edged up about 0.2%. So not really much movement there. So again, pretty steady in terms of average price. And despite all these changes, all the segments are still below their 2022 peaks, with detached homes seeing a 19.6 correction over the past 3 years. So we've really seen that drop off. But once we saw that drop off, if you look here in 2023, 2024, 2025, we've stayed relatively consistent and steady in the average price. So regardless of the weak market conditions that we have seen and have heard in the news with tons of inventory and lack of sales and trade wars and everything else going on in the economy, regardless of the weak market conditions, we've actually averaged selling prices remain resilient with a mild 2.2% annual decline in February to 1,084,000, reaching a 3-month high actually. So this results in the performance reflecting a solid 10-year average growth of 7%. So, and that's actually right on trend. So if you take the GTA average sale price for the last 40 years, we're actually just under 7% average sale price, right at 7%. So not too bad in terms of rate of return. So if we look at detached properties specifically, as we mentioned there, down in the previous slide, down 19% over the last 3 years since its peak. So detached inventory has actually doubled here in February. So active listings for detached homes more than doubled, rising 103% to the highest February level since 2019. Semi-rose towns increased 95%, reaching a high not seen since 2009, while condo listings grew 47% year over year. So that's a record high for February. And if you look at this 10-year average chart for February periods over the last, let's see, this is 8 years, 9 years. The average for active listings in February is just over 10,000 active listings on the market. Here we have over 19,500 active listings right now on the market. So there's tons of supply there. So if you are a buyer, if you are getting into the market, this is an important time to note that this could be a good time to purchase, right? For a seller, maybe not so much, but it depends what you're trying to do. If you're looking to move up, maybe upgrade or get into a bigger home, it could be a good time to do that. Or even get into a right size home if you have a ton of equity in your property and you're looking to get into that right size home that works for you, could be a good time as well, because you'll be winning, so to say, on the purchase side. So if you ask anyone back in late 2021 or early 2022 when they purchased, would they rather have purchased then or now, right? Like, we don't have the equity in your home at this point from when you purchase. So on the buy side, that's when you're going to make your money. Next, after a surge in January, we saw new listings began to level out in February, dipping 3% month over month, but rising 5% year over year. So since January, we saw a little dip in the listings, but when you compare it to last February, we've seen a 5% increase. So we'll keep an eye on things, how they kind of go as we get closer to spring here, if listings continue to go down or if they continue to go up. This takes us to the sales. So sales, as I mentioned earlier, we've seen a little bit of a decline in sales, or a bit of a decline in sales. And if you look at the total MLS sales in February, it dropped to 4,037 homes. So the lowest February result in over 25 years outside of the global financial crisis in 2009. So the 10-year average total sales in February is just over 6,700. And we barely got across 4,000 sales this past February. So the buyers just are staying on the sidelines right now. There's a little bit of uncertainty. The consumer confidence just is not there, but we have the supply. So again, if you are in the market, I'm not speaking to everyone. If this is the right time for you to purchase, if you're thinking about it in the next 6 to 12 months, that, now's the time to move into that next step, maybe get out of that townhome into detached, or out of that condo into a townhome. It might be worth looking at, because again, you're going to make the money on the buy. And as we see right now, we're getting a little bit more opportunity for buyers. So the sales to new listings ratio of 33% remain firmly in buyer's market. As I just mentioned, it is a buyer's market right now for the second straight month. And a balanced market is between 40 to 60%. We're down at 33%. Sales to new listings. So that takes us to the condo inventory, which is really keeping that months of inventory high. The months of inventory in the condo, as we see here, condo inventory reaches a record February high. So active listings for the condo apartments increased 47% from a year ago and 97% compared to 2 years ago, reaching a record high for a February period. So a ton of inventory out in the condo market. If you are thinking of selling a condo right now, you got to be very strategic in your pricing and marketing, and make sure that you're in that basically top 30% of listings out there. And for the condo space, I would even say even tighter. You want to be one of the ones that really stand out, whether it's through price, staging, marketing, whatever it is. You need to check all the boxes though to really have your condo stand out. And if you do, hopefully it will sell and you'll be able to take advantage on the buy side with the new property that you're looking at. And lastly, this condo supply surged to 6.2 months in February. As I mentioned, there's a ton of inventory out there in condos. So if you are looking at even getting into either investment property or into the market for the first time, this would be a great time to start looking at condos. You will have some selection to look at. You can take your time, you can look around, you can see floor plans you like, floor plans you don't like. You don't have to feel so rushed, and you can have a lot of control over the process. And that this inventory, as it says here, has doubled the level from a year ago and the highest February level in the last 25 years. So if today's market proves anything, it's that buyer confidence is everything. And right now, confidence is pretty low. So despite a stronger than expected economy at the end of 2024 and steadily declining interest rates, uncertainty from the escalating trade war with the US is shaking up the housing market. It's pretty clear. With the potential for 25% tariffs on Canadian goods and a similar retaliatory tariff on US imports, economists warn that we could be heading into a recession. That means more financial market volatility, more rate cuts, and even more hesitation from some home buyers and home sellers. So, what does this mean for you? That's why you're here. Well, one thing to note is that the turbulent times do create opportunities, and depending on where you're at in your real estate journey, it could be important to stay up to date with the market. Coming up though, I do believe the spring market could stay soft with lower sales and continued price stability. One thing is clear though, housing prices have remained surprisingly resilient, even though high interest rates and economic uncertainty. And if tariffs continue to drive up construction costs, home prices could find even more support in the long run. Plus, with over 1 million homeowners renewing their mortgages in 2025, further rate cuts from the Bank of Canada could ease the financial burden and spark a shift in the market. So the next few months will be critical. So if you're thinking of buying, selling, or just watching the market, make sure to stay informed. So drop a comment below. Do you think this trade war will push the market lower, or will housing demand bounce back? If you found this video helpful, hit that like button, subscribe, and stay tuned. I'll see you in the next one.